Our next guest, Dino Kos, spent many years at the New York Fed. He's also managing director now and head of equities at Portales Partners. Dino, good morning. You also mentioned to me during the break that you used to work in Switzerland, and having had the perspective of watching these conversations at Basel over the years, what's the bottom line from this latest one? Tough enough?
For the taxpayer, this is good news, because what we found out during the crisis is that a lot of banks didn't have enough capital, and the quality of that capital was actually poor. And so this is an important upgrade. And I should say that the last Basel II was negotiated over about a 7, 8, 9 year time span. They did this over a year, so they did this very, very fast. Now they are very generous with the transitional rules. It takes 7, 8 years before all of this is in effect. But we should remember that the markets are going to demand that the banks meet this sooner than that. And so the banks that meet this now, these standards now, they will brag about that. That will put pressure on those that don't to comply sooner. And to some degree, you saw this already. Deutsche Bank's announcement that it's going to raise capital the last few days, in part, it's an important response to this announcement, which they were foreshadowing. And
many of the U.S. banks have already gone through and sort of reached these new benchmarks, right? It's the European banks that are really the ones most affected? Exactly.
And, nearly all of the big U.S. banks already meet these standards. The super regionals, they have cleared these as well. So the bigger impact will be on the Japanese banks and on the European banks. And again, Deutsche Bank is sort of the leader in coming out of the gate in terms of going out and raising more capital. They will be under more pressure sooner to increase their buffers.